Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a look at some of the top stories in the financial sector. First up, Wyari Renewable Technologies is making headlines after its board approved a plan to acquire a 55% stake in Associated Power Structures Limited, or ASPL, for approximately Rs 1225 crore. This move is seen as a strategic expansion into the power infrastructure segment, and it will be interesting to see how this acquisition plays out for Wyari Renewable Technologies. In other news, Gori Renewable Technologies' competitor, Renew Energy, has been gaining traction in the market with its focus on renewable energy solutions. The company's efforts to reduce carbon footprint and increase the use of sustainable energy sources have resonated with investors, and we'll be keeping an eye on how this affects the overall sector. Meanwhile, the BFSI sector is also seeing some significant developments. Experts like Gaurav Garg are weighing in on the potential impact of recent banking reforms on the industry as a whole. With changes to regulations and increased scrutiny on lending practices, banks will need to adapt quickly to stay ahead of the curve. In addition to these stories, we're also tracking the performance of some key stocks, including SBI, Axis Bank, HDFC Bank, Infosys, Wipro, and NTPC. These companies are often seen as bellwethers for their respective industries, so any movement in their stock prices can have a ripple effect throughout the market. As we continue to navigate the complex world of finance, it's essential to stay up to date on the latest developments and trends. We'll be bringing you expert analysis and insights to help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of personal finance and explore the latest trends in savings and investments. Today, we're discussing money market accounts and their current interest rates. As we've seen in recent years, these rates have been quite volatile due to changes in the Federal Reserve's target interest rate. Historically, money market account rates were very low following the 2008 financial crisis, typically ranging from 0.1% to 0.50%. However, with the Fed's aggressive interest rate hikes starting in 2022 to combat inflation, deposit rates across the board, including those for money market accounts, rose substantially. Many accounts began offering 4% or higher by late 2023. Despite the recent downward trajectory of these rates due to the Fed's cuts, online banks and credit unions continue to offer some of the highest rates available. It's essential for consumers to look beyond just the interest rate when choosing a money market account. Factors such as minimum balance requirements, fees, and withdrawal limits can significantly impact the overall value of the account. For instance, while some money market accounts may require a substantial minimum balance to earn the highest advertised rate, others offer competitive rates without such restrictions. Additionally, ensuring that the chosen account is insured by the Federal Deposit Insurance Corporation, FDIC, or the National Credit Union Administration, NCUA, provides an added layer of security. When considering where to place your savings, it's also worth comparing money market accounts with high-yield savings accounts, as both can offer attractive interest rates. The national average for money market accounts may be around 0.56%, but the best rates can rival those of high-yield savings accounts, often above 4% APY. As consumers navigate these options, understanding how much they can potentially earn is crucial. For example, depositing $50,000 into a money market account with a 4.5% APY could yield approximately $2,303 in interest over 1 year. While there aren't currently any money market accounts offering 5% interest, some high-yield savings accounts from online banks come close, with rates upwards of 4%. It's always a good idea to check with local banks or credit unions as well, as they may offer competitive rates tailored to specific needs. In conclusion, the landscape of money market account rates is constantly evolving. By staying informed and considering all aspects of these accounts, consumers can make more educated decisions about their savings and investments. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at the latest developments in the world of finance. Bitcoin has slipped below the 88,000 level amid concerns over a potential government shutdown and ahead of the Federal Reserve's first rate decision of the year. The cryptocurrency market has been experiencing a pullback over the past week, with most major tokens sharply down over the past 7 days. This move has resulted in 224 million in liquidations on bullish bets in the last 24 hours, led by 68 million on Bitcoin-tracked futures and 45 million on Ether-based futures. The Japanese yen has also been making headlines, with Prime Minister Sanae Takaichi warning against abnormal market moves, which has raised caution across Asian trading desks. In the U.S., political risk is adding to an already unsettled backdrop, with Senate Democratic leader Chuck Schumer saying his party would block a major spending package unless funding for the Department of Homeland Security is removed. This increases the risk of a partial government shutdown, which could tighten near-term liquidity conditions and weigh on sentiment across risk assets. Historically, Bitcoin has seen selling pressure ahead of a potential government shutdown, followed by a rally. Currently, polymarket traders are putting a 76% chance on a U.S. government shutdown by the end of this month. Looking ahead to the week, investors will be watching a heavy earnings week, with results from several mega-cap technology firms, including Microsoft, Meta Platforms, Tesla, and Apple. Traders will be looking for clues on how these companies' earnings trends are shaping artificial intelligence-related results. The Federal Reserve's first rate decision of the year will also be closely watched, with Chairman Jerome Powell's post-meeting press conference potentially moving Bitcoin and other asset classes. While the Fed is expected to hold rates steady, the market will be looking for any hints on future policy decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.